Um, First, want to point out that unfortunately, Tiago is not able to join us today. If you noticed that his slide was there in the middle, or his name was there in the middle. Rather, we're joined by David Adepoju, who is the editor of the, actually, you know what? We'll get to introductions in just a second. First, I'm Hunter Tressiter. So nice to see so many familiar and friendly faces here today. I'm joined by, as I mentioned, David Adepoju, the editor of the African Blockchain Institute, and Professor Alexandra Andov from the University of Copenhagen. And we're going to be talking to you today about the future of digital currencies. And one of the things that I'm very keen to explore is where we are in the so-called hype curve. You know, as with any new technology, there is this period of overwhelming optimism where people think it can solve all of the problems in the world. And then that optimism starts to give way to what you might call pragmatism or realism as you start to see what that technology's kind of core superpower is. And I'm really curious or kind of interested in exploring with the two of you kind of where we are with that understanding about what the superpower of digital currencies is. But first, let me get into a little bit more of an extended background about who it is up here on the stage speaking with you today. As I mentioned before, I'm Hunter Tressiter. I am the head of global social impact programs at the Filecoin Foundation and Filecoin Foundation for the Decentralized Web. Prior to joining FF and FFTW, I was a career US diplomat for 15 years, where I focused on online harms and human rights. Now, for those not familiar with the work that we do on the social impact team at FFTW, I like to talk about it in terms of our ABCs. And the A is accelerate, and that's we seek to accelerate the adoption of open decentralized technologies. The B is build, that's build communities of champions and users of open decentralized technologies. And then the C is communicate, and that's communicate the values and benefits of open decentralized technologies to wider audiences. As I mentioned before, joined by David Adepoju. David has more than a decade of leadership in the African technology and innovation ecosystems. As a researcher, his work has appeared in renowned academic journals. As an editor, he curates and presents insights into the dynamic landscape of blockchain innovation across Africa. We're also joined by Professor Andov, who is an associate professor of law at the University of Copenhagen, where she focuses on, or where her expertise lies in understanding and regulating emergent technologies, including blockchain, crypto assets, and AI. So David, I'd love to start with you. Now, your recent research has looked into the use of crypto in Nigeria and Rwanda, and if I remember correctly, a significant portion of the populations in those two countries are using crypto and what you might call digital currencies rather than traditional banking. Yeah. And why is that? What drew those people to crypto rather than the traditional banking sector?
Thank you. I've done research in 12 African countries on blockchain and cryptocurrency, and we started seeing a lot of insights from different African countries, especially Nigeria. I can speak to Nigeria and Zimbabwe, for example. The reason why a lot of people in those countries are tending towards crypto is, number one, traditional banks in Nigeria are not really interoperable with banks from the West. So in facilitating trade, it's very hard for people who do a lot of business and importation and exportation to have access to the volume of foreign exchange they need from the traditional banks in Nigeria. And we've also given this narrative in some of the reports we've published on how, for example, people who engage in importing automobiles from the US to Nigeria, maybe for one trip to come and do the trade for automobiles there, they need like $1 million. They don't have the traditional banks in Nigeria to give them that volume. And we've seen a lot of them break their journeys into three, and they do all the transactions in crypto. And they just come to the US with $2,000 fiat in their pocket to just come facilitate the trade, and they go back home. And we've seen this over and over and over again. And it also shows the level of freedom and interoperability that crypto gives to a lot of people. But also in Zimbabwe, hyperinflation eats the Zimbabwean dollar, and a lot of people moved into crypto to be able to save their fortunes in stable coins to save themselves against hyperinflation, right? But on top of that is the young population in these two countries. Many of them work for foreign companies, and for example, a lot of young Nigerians have issues receiving payment from people they work for in the US, for example. Issues with PayPal, all the payment systems that is very popular in America. So many of them receive their payment in cryptocurrency. And we've seen this because the country is doing massive training for tech professionals, and it's a pull and push kind of situation. Many people are being trained because there are opportunities that the country wants to push them into. Others are being trained to wait for other organizations or countries that need them to come take them. So we've seen increase in issues with payment systems, but also we've seen startups in Africa raising a lot of money from the West, but they are not able to facilitate that money coming into Africa freely, right? Because the banks might even ask you for your mother's birth certificate for them to clear the money, right? So we've seen also the opportunity that crypto gives to these kind of startups to bring in their money, and they're able to do business with it. So I'll limit it to those three examples: hyperinflation, but also gig economy, and also the opportunity to facilitate trade faster. Yeah,
that's fascinating. And I want to dive into those. Before we do that, I think that we've got the other side of the coin with Professor Andov's work in Europe, where I suspect that the motivations for people using crypto and digital currencies in Europe are not nearly the same. I know your recent research has looked at the EU and the EC's exploration of standing up a digital euro.
Yes.
And I'm curious why those governments would do that. One of the things that we've talked about, allow me to jump on that kind of that former diplomat soapbox here for a second, but kind of the bare barometer for a functioning government is a monopoly on violence. If they can control the use of violence in their territory, the very next step is usually controlling identity and commerce in the form of currencies. And so why would a government that has, we've had a euro for many years now, why would they be exploring the potential for a digital euro?
So I think there are a couple of layers, and definitely numerous reasons why both the European Commission and the European Central Bank have been discussing this. And we also have discussed while preparing for this panel to kind of reflect and to kind of align our thoughts and bring as much different perspective to you and to the audience, obviously, is that from the European Union's perspective, I would say that the question of financial inclusion was not or hasn't been the number one. I actually looked it up, and currently is like less than 3% of the European adult population that is unbanked. And majority of this population is currently willingly unbanked. And then when speaking about the European Union, I think it's also important to recognize differences between different member states. Whereas I live in Denmark and travel across the EU, of course, I have the privilege of having different kinds of apps, cards. I don't even use cash anymore. I truly do not believe when is the last time that I know in the US I now have some dollars in my pocket, but otherwise I wouldn't ever have any kinds of Danish crowns in my. So for example, in Denmark, the perspective has been truly, we don't need this because we are digitized enough, right? So there is this push and pull between, but then you go to Germany, and many people still in Germany will pay cash. So there are still the kind of distinction disparities. And of course, I don't want to speak about the mindset of European Commission, because for that reason we should have someone from the Commission. But I think, looking at the EU as truly international or European legal project, one of the things that the EU is based on is this free movement. And part of it, and I'm sorry to go back to the law, but there are these four kind of pillars of the free movement of persons, goods, services, and capital. And if you think about the capital, this hasn't been achieved. If you live in Spain, you have Spanish account, you have Spanish insurance, you still have problems if you move between different countries to collect your pension, et cetera, et cetera. So I do think that this might be a little bit of a possible wish to truly again push, and the European Union again through the past 40 years, every now and then adopts new kind of a package, financial package to support the capital union as is. And of course, European one single currency, the euro, has been part of it. But I would say that undoubtedly there is this wish to achieve true capital union through all of the member states of the European Union, which is a little bit different, obviously, perspective that is in Africa or different African states.
Yeah. You'd mentioned in our conversation data was an important part of this.
Yes.
What data do you think that, I mean, if it's a digital euro,
Yeah.
I'm guessing that the data would flow through the EU institution?
So there are two, also, again, as I mentioned, there are different layers. So I think that the digital euro, from the seeing it as a union, comes from the Commission. Now the European Central Bank, on the other hand, which also has its own rationales and reasons, sees it from a different perspective. And it envisions it maybe, and here probably more accurate will be an economist speaking to this matter, but seeing it as a great tool to actually navigate through different kinds of economics issues, macroeconomic issues, to see what is happening on the market and address it through different policies. So, and this would help. So there are different kinds of papers currently coming out from the European Central Bank because it hasn't been yet fully green-lit, one could say. So there are a couple of approaches, and one of them would be where you would have the issuance, the digital euro would be issued by the bank, by the European Central Bank. Then it would go through other financial banks, so they're not completely disregarding the financial infrastructure, because what would we do if we killed the banks? And then they would then further distribute the coins or whatever form it would get to the individuals.
Yeah. And that's fascinating because I had assumed when I was first reading your research that part of the motivation from the EU was a desire to remove, kind of take the oxygen out of the room for alternative currencies. I want to take something that you had said, and David, and let's talk about it a little bit, but something that Professor Andoff had mentioned, which is that a good percentage of the people in Europe who are not using traditional banking are willingly unbanked. But you had talked on someone not having access to some of their mother's documents. I think it might have been a death certificate.
Yeah.
And so I have to assume that in that situation where it's the struggle with kind of meeting a certain requirement, it's not a willingly unbanked situation, it's a unwillingly unbanked. So is it that cryptocurrencies and modern digital currencies are providing or kind of maybe tailoring their usages to, or their requirements to the use cases of the people on the ground? And so maybe a traditional bank might require a mother's death certificate for something, but digital currency might not. Is that part of it, that it provides a level of access?
Yeah, two layers. For example, in African countries that doesn't have progressive regimes, crypto connects to the bank in so many ways. For example, when you're using Binance in Nigeria, you can buy USDT or buy Bitcoin with your Naira card on Binance, for example. And before I came here, there's serious inflation in Nigeria, and the government actually switched off Binance. So in Nigeria now, you cannot open your Binance, because when the inflation is eating really hard, people started moving into peer-to-peer transaction on Binance, and in less than 24 hours, the crypto activity just went off the roof, and the government was really afraid, and they panicked, and they switched off. So the crypto gives a lot of freedom to people. I look at Africa when it comes to technology as technology-born generation and technology-adapted generation. Most of the technology-born generation, many of them are unwillingly unbanked, because if I cannot I cannot use, if I do peer-to-peer, take my money from stablecoin into my traditional bank account, there are peer-to-peer aggregators that I can send crypto to, and then they will give me cash. And I don't need any bank to do that. And a lot of gig workers are doing that. The people they work for pay straight into their crypto wallet, they go to a peer-to-peer aggregator, they send the USDT, and then they get the cash, right? So we've seen situations where banks are becoming irrelevant to a lot of people, but also the kind of documentations that the traditional banks require sometimes to even get banked is really ridiculous. But also we've seen situations where in Kenya and Rwanda, for example, mobile money is the thing. And like she said, I can't remember the last time I had cash in Rwanda because my money is on my SIM card, right? I can't remember, maybe 5 years ago that I've had used cash in Rwanda, right? And if you are not moving a lot of volume, right, and you don't have need to access credit from the traditional banks, you can live fine without the traditional bank accounts. The reason why many people open traditional bank accounts in some part of Africa now is because when they need loans from the bank, their credit worthiness is dependent on the simulation of their transaction records and their transaction behavior in their fiat bank accounts. But we've seen situations where my research is based on how a lot of people from 12 countries we've studied, we have people who do $50,000 in crypto value every month, but they don't have 1 naira in their traditional Nigerian bank accounts. But they do $50,000 in crypto. So when those people, most of them business people, when they go to traditional banks for loan, there's nothing to calculate their credit worthiness. So I'm working on regulatory conditions for banks and, to look into this situation where we can use crypto transaction records for credit worthiness in traditional banks, right? Because the real definition of financial inclusion is becoming skewed, and we might need to redefine it because many people are living fine. And I don't know if we should be asking the question of should we bank more unbanked, or we should look for new models because the transaction behavior is changing every day with crypto and with mobile money, right? And that is why in Africa, the government gives banking license to mobile money operators because they still want them to operate like a bank, get the documents like a bank, and also do credit worthiness for people like a bank. So there's a lot of situation changing that in terms of how people are willingly unbanked. Crypto peer-to-peer is doing that for people, but also mobile money is doing that for people.
I think that's a fascinating question you asked, which is, is there an incentive, is there a reason why we should push people towards traditional banking if these kind of next generation, I keep falling back on the word banking, my vernacular is not wide enough, but these kind of financial institutions are providing the services that they need. And it sounds like one of the few reasons why somebody would need to enter the traditional banking sector as a customer would be to get loans.
Yeah.
And that when we get to a place where cryptocurrencies might be able to fill that need, then there's really nothing drawing. Yeah. Is that accurate? Do you think that's...
Yeah, it's accurate. The government is always afraid of a lot of things. They fear that there's a lot of transaction happening off the formal financial system of the country. It's always a concern for the government, right? But I also tell people that at the end of the day, for countries where the crypto exchanges are connected to traditional banks, at the end of the day, the money will still enter the traditional bank when you convert to fiat, right? So it's just a matter of looking at the balance between, what is happening off the traditional rail and also what is happening in the crypto ecosystem. But I believe some countries need to come to the dialogue table with the crypto ecosystem. Like I said before we came here, many of us say crypto is speculative. That is in some part of America and Europe. In Africa, crypto is king now. Like, you're just talking about speculation. People are using it daily, and they are not necessarily even using it for maybe keep so that when Bitcoin goes up, they make some money. They're actually using it as an instrument of transaction. So when there's narrative of speculation, some people don't even care. They are using it, right? So I believe we're getting to that point where the true rebellious nature of the blockchain technology and the nature of crypto is coming out in most part of Africa and South America. And I think there's that opportunity for traditional banks to also reimagine how they engage the ecosystem. I said in May 2021, Nigeria banned crypto, and 3 months after, peer-to-peer transaction went up by 65%. That tells you that there's something there, and people are using it. As Binance is not opening in Nigeria at the moment, people are using VPN to continue their transactions.
So you touched on the speculation question, and I think that's a great segue back to kind of the other side of the coin, which is what we're seeing in Europe, where that use might be speculative because it sounds to me like it's not providing an alternative for so many people, which then leads to a question that I have for you, Professor Andov. If this digital euro is established, what would be drawing people to it? Kind of why would the average person in the EU want to use the digital euro? I know you touched on the fact that there's not easy capital flows. Is that part of it? Are there other factors?
That's a good question. I think one of the things maybe before getting into to answering your question is, and I wonder, and maybe sorry for jumping in, but there's something that David said that was super interesting is that obviously there is this daily use of crypto in different states of Africa. And what unfortunately we see, and this is because over the past few years I've been also working with different kinds of financial investigation units, is that there is a huge amount of fraud happening, right? And given the current state of unfortunate diplomatic affairs in Europe and the war in Ukraine, we see that, the sanctions towards Russia are bypassed by using different kinds of crypto assets. And this is of a major concern. And of course, this is because the situation in Europe is as it is. And of course, there has been even before some fraudulent use of crypto, but you have fraudulent use of cash on every day, right? So it's comparable, but just simply because of the diplomatic or the situation that is there, the kind of the balance has a little bit shifted, right? And thus, going back to the question that you ask, in a sense, for the people, why would people use it? So I think that I'm not sure that the European Central Bank actually asked this question because the daily use, I do believe there wouldn't be you wouldn't feel the change. As long as you're using your card or whatever is there, it's not necessarily the change in the usage, it's the change in the infrastructure. And I think that this is something that, from scholarly, both legal, economic, and also computer science perspective is like, can we redesign the financial and monetary infrastructure that we have? And who would be the winner and who would be the losers at the end of that change of the infrastructure?
Coming from my government background, a government not stopping to wonder why it's doing something or what its use case might be is very relevant. There's this old, not at all funny joke that we used to tell in the State Department that is, there's no problem in this world that 3 old white guys in the basement of the State Department don't think that they know how to fix. And it's all about the fact that they don't understand the context, they don't understand the needs of the people, but by God, they've got a solution to whatever that problem is. That's been my experience with government, whereas when you look at kind of these next generation frontier technologies, these are driven by the market often, and the market has to be very conscious of the needs of its users. Now, this has been a wonderful conversation. I feel like we're just getting warmed up. I certainly could keep this going for a while, but I am getting the 2-minute sign. And so I'd like to leave the audience with one thought from each of you. And so the question to prompt that thought is, what do you see as the future, let's say about a decade out from now, the future of digital currencies in the context that you've been exploring in Africa, in the context that you've been exploring in Europe? And David, I'll start with you.
I think in the next decade, we're going to have more progressive regimes in Africa when it comes to blockchain regulation and crypto policies as well. I think most African countries are beginning to see that you cannot clamp down on some frontier technologies that is really impactful in the grassroots. People would always find a way to use it. So I see a lot of, I want to be a digital prophet here, that in the next decade, we're going to see traditional banks, government, and the crypto ecosystem coming together in one room to speak to one another because the value would meet at some point. And it's not going to be crypto against traditional banks anymore.
Great.
Yeah.
I think that in Europe, we see this already happening, right? So we see banks, crypto companies, startups coming together with the governments and trying to figure out the way. Now, what I'm a little bit afraid of is that if the European Union goes forward with introducing the digital euro, is how this transition is going to happen. And how, because naturally it won't be the European Central Bank that will design it from technological perspective, from technical perspective, right? So will there be other tech companies coming in to provide that infrastructure? And will that be anyhow better to the banks, right? So if I'm to see what is happening, I think that there will constantly be this tension. I hope that many more people will start asking really hard questions when it comes to this new infrastructure. I do believe that there needs to be a change, and I think that there is a push for a number of reasons, not necessarily just from the individual perspective, but also from the simple perspective that if you do any kind of cross-jurisdictional transaction, you pay 7 to 10% of the fee, which is insane, I think. So we will see the changes, but I'm maybe a little bit more cautious, and I don't know how this is going to play out. But I just hope that we will, before we truly step into that next generation of having crypto everywhere, we really will think about who and how will design the technical infrastructure.
Hard questions. I can't say that I've asked a lot of hard questions, but someone should be asking those hard questions. And who really does know where we're going to be in the next decade? So much has already changed. I'm happy to be along for the ride with the two of you. Can we have a round of applause for our two panelists? Thank you very much.
Thank you.